You and I, we met a Tuesday morning, sun high in the sky, and I felt free. You did your best and I ignored the warnings. Fair enough, I guess I didn't wanna see. I wanted an adventure, I wanted something new. I gave you half my heart and figured there is just no trust in you. Fool you, I will fool you, I will fool you, 'cause you're never gonna get the best of me. Use you, I will use you, I will use you, until I am strong enough, until I can break these cuffs. You and I, we tried so hard to make it. You promised me that you would never leave, but time and time again I knew you'd break it. You said, honey, it's just the nature of my being. I wanted an adventure, I wanted something new. trust in you. Fool you, I will fool you, I will fool you. 'Cause you're never gonna get the best of me. Use you, I will use you, I will use you. Until I am strong enough, until I can break these cuffs. You and I, we met at Tuesday morning. Fool you, I will fool you, I will fool you. 'Cause you're never gonna get the best of me. Use you, I will use you, I will use you. Until I am strong enough, until I can break these cuffs. Fool you, I will fool you, I will fool you. 'Cause you're never gonna get the best of me. Use you, I will use you, I will use you. Until I am strong enough, until I can break these cuffs.
was never the one to write up a song for just anyone. I was always the one to find myself lost in long conversations. Cause I've always been told that things will unfold if you keep on waiting. But then you came along and proved me all wrong. I was feel so mistaken. Cause you glue all the pieces back together. Yeah, you take all my wrongs and make them better. Yeah, you're making me wanna try forever. And I feel so free, oh my sweet baby. I was never the one to give up the ghost. No, I was so stuck. I kept on playing my part, wanted to give it cause nothing was changing. But with you it's so clear, and now that you're here I see colors in every spectrum. Guess I finally learned my lesson. Cause you glue all the pieces back together. Yeah, you take all my wrongs and make them better. Yeah, you're making me wanna try forever. And I feel so free, oh my sweet baby. And I think to myself, and I'm thinking out loud, we won't need nothing else for the rest of our time. And I know it so well, I will always be by your side. Cause you glue all the pieces back together. Yeah, you take all my wrongs and make them better. Yeah, you're making me wanna try forever. And I feel so free, oh my sweet baby. All the pieces back together. Yeah, you take all my wrongs and make them better. Yeah, you're making me wanna try forever. And I feel so free, oh my sweet baby. What if the wind could spread your love? What if your sweetness could reach everyone? There'd be no wars. Maybe the birds will sing about your heart. Maybe the trees will whisper the word. Maybe the sun will spread your joy to the ones who lost their hope. Fill my head with roses. I can't help but dream What if your sweetness could reach everyone? There'd be no wars. Dreaming of you. Dreaming of you. Dreaming of you.
They were in high school when they met, and things got kinda awkward. With sparks in the air, he would stare at her in class, and she would try to act cool. But it was obvious, like, ooh, they would be together, ooh. One day she said, write me a love song, 'cause I know you'll make it beautiful. And maybe I'll call you my sweetheart, and promise nobody can steal me away. Then I am yours, 'cause I want you and I wanted you to know. He looked at her and then he smiled, picked up a pen and paper, and started writing. Probably something about her eyes and how they're always shining, or something cliche like ooh. Baby, I only want you. It's true. And then he said, I wrote you a love song, and I tried to make it beautiful. It's a song about your sweet, sweetheart, and how nobody can steal me away. Yeah, I am yours, 'cause I want you and I wanted you to know. As he sang, she started to dance, grabbed his arm and took his hand. He held her close under the moonlight as they kept on dancing. And now they're singing their love song, and they sing it kind of beautiful, calling each other sweetheart. I promise nobody can get in their way or steal the show. They're in love now, and I wanted you to know.
late at night in a room lit by the TV light. All I want is to get some shut-eye, but my thoughts are keeping me awake. I don't know what it is, but it's been like this ever since we kissed. I don't know what to do, 'cause I long for you every single night. It's been like this ever since we my mind occupied so that I can focus on anything but you. 'Cause all I want is to get some shut-eye, but the thought of you is keeping me awake. I don't know what it is, but it's been like this ever since we kissed. I don't know what to do, 'cause I long for you every single night. I don't know what it is,
Party. Do you and does the president have a view on Walt Disney using services of the Communist Party to make this movie?
You know, Tom, I actually saw the movie over Labor Day weekend with my 8-year-old twins. And when I heard this, and by the way, I didn't hear it until after I watched the movie. It's really sad because if they're using this forced labor from Xinjiang, where they have them in internment camps, and they do everything from sterilization, forced abortion, torture, sexual abuse. They make them take all kind of drugs. It's just, it's gotten out of control. And so if you look at the Chinese Communist Party, it's infiltrated our businesses, our universities, healthcare, definitely Hollywood. And you know, what's interesting now is I think because of the pandemic, citizens of the world have woken up to their strategy, and they don't like it. And as a consequence, I think government leaders and corporate CEOs are beginning to stand up to that
Mr.
China's
Secretary,
bully.
this is critical, and we're going to run out of time. I'm so sorry. Should the Walt Disney Company be punished because they utilize those services?
Well, I think those kind of decisions are up to the president. But I can tell you one thing, that when you look at combating China's aggression, this is the most passionate, unifying, bipartisan issue of our time. I mean, when you go to the Hill, it's solid. Democrats and Republicans alike are united on this issue.
It's a scary thing. You say you have twins. That means one has to go to Purdue and the other has to go to the University of Indiana. These are tough decisions. Mr. Undersecretary, thank you so much. We really appreciate it. Keith Crock, of course, and his leadership at, we should mention, Purdue as well. There's also leadership in the legal area, and it is right now Bloomberg confirming that Tiffany sues LVMH in Delaware court to enforce their combination. This is a battle. The headlines coming out furiously right now. We'll have much more on this through the day. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. Senate Majority Leader Mitch McConnell says the new Republican stimulus plan focuses on restoring supplemental jobless benefits and extending help for small business. The Senate votes on the measure tomorrow. It will cost as much as $700 billion. That's about a third of what House Democrats want to spend. Joe Biden opens a new front on economic issues today. The Democratic presidential candidate heads to the battleground state of Michigan. There, Biden will unveil a new policy aimed at fighting offshoring. That's a practice of U.S. companies basing some operations in low-tax countries. Polls show that voters are starting to trust Biden's approach to reversing job losses. And AstraZeneca has paused its coronavirus vaccine after a person taking part got sick. That could delay efforts to speed an immunization. The drug maker says a trial's participant developed an unexplained illness. The pause will allow research to examine safety, data, and maintain the integrity of the trials. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thanks so much. Now, coming up next, we speak COVID-19 with Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. We'll talk about this AstraZeneca trial now put on hold. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Good morning, everyone. Bloomberg Surveillance, an eventful day as well. Francine Lacroix and Tom Keene were watching Tiffany and LVMH simply blow up, is a professional word. Of course, AstraZeneca with some real challenges with the vaccine. Sam Facili just brilliant on that an hour and a half ago. Thank you, Sam, for the early morning view. Right now, we continue forward on the pandemic with Lauren Sauer with the Johns Hopkins University, their assistant professor of emergency medicine. Lauren, you know, in the science of vaccines, there's lots of failure along the way. Give us your timeline. I don't mean the punditry. I don't mean all the non-pros. When do you expect that we can sort through the failures to come to a success on vaccine?
I think we're going to see a success in vaccine sometime next year. I am not as optimistic as some of the other people who are talking about a vaccine, you know, by the election or by the end of this year. I think we're seeing some really good data out of these vaccine candidates. There's 9 in phase 3 right now. But I think we do have some time where we're going to have to wade through some of these data and better understand how well the vaccines are working and what the priority is for manufacturing.
Are we going too fast, Lauren, in trying to find this vaccine? Or, you know, there will be hiccups, but actually it will be safe when it's out?
I think there's elements that are moving a little fast for my liking personally, but I think the news over the weekend of the vaccine makers led by Pfizer and Moderna and AstraZeneca to pledge safety over speed was a really important step. It's a little bit of a worrying step, I think, because the fact that they felt that they needed to say that where we're prioritizing safety means perhaps that they were being pushed to speed up the timeline. Everybody wants a vaccine. A vaccine is an incredibly important tool in our toolkit, but we need to prioritize safety. So I think seeing that step by the vaccine makers was really important.
Lauren, what does it mean in terms of what they're worried about? Is the worry that we have a vaccine that's not safe, or is the worry that we have a vaccine that's safe but that nobody actually wants to be injected with?
Yeah, I think it's some combination of the two. I mean, I think these phase 1 trials, they start with safety. So we understand the safety profile before we even start to understand the efficacy of the vaccines. But here in the U.S., for example, we have a vaccine hesitancy problem. So it's not just rolling out a vaccine that's safe based on clinical data. It's also really important to understand what will stop people from taking it? What will encourage people to take it? What are the safety and efficacy data that people, the public, want to see in order to ensure that they will go and get that vaccine? Because if we create a perfect vaccine but no one wants to take it, it doesn't matter.
I mean, because of this unexplained illness, which paused AstraZeneca to stop the trial for now, to suspend the trial, does it mean that it will also be much more difficult to get people, healthy individuals, to try out future vaccines for COVID-19?
I think that people should actually be happy to see that this is happening. Normally, I think that this wouldn't make national news, but because this is such a national and international priority, this is a standard process in both vaccine and therapeutic creation and production. We stop trials when we see something concerning or unexplainable, something that doesn't align with the data we saw in phase 1 and 2. And so this is AstraZeneca doing their due diligence, looking at this adverse event, looking at what happened to this person who had an unexplained illness, going back through their data to see if perhaps they saw it elsewhere.
Thank you so much, Lauren Sauer there of Johns Hopkins. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, earlier this year, Netflix co-chief executive Reed Hastings announced that he and his wife would give $120 million to fund scholarships at historically black colleges and universities. He discusses the donations with David Rubenstein on the latest episode of The David Rubenstein Show, Peer-to-Peer Conversations.
You and your wife recently made a contribution to United Negro College Fund and to Morehouse College and to Spelman College. Why did you decide to do that? Is that not your largest philanthropic contribution, any one gift?
No, it's not the largest, but it's the loudest, or sort of the most public. We tend to mostly be very quiet about these things, but we wanted to show solidarity for Black education, and Black education is so critical to economic mobility, political mobility, and the sense of belonging. And the challenge, for us as a culture is really the legacy of slavery. And it continues to be a tremendous scar across the soul of America. And it's, awful, and it's so bad that it's hard to look at and talk about, and it's so hard to look away. And we really haven't come to terms with the legacy of slavery in our country. So this, modest donation, again, relative to the needs, is really about, Black economic gains and education.
So the story that I read was that you were originally considering a gift of maybe 1/10 that size, and then the last minute you increased it. When you called the head of the United Negro College Fund, was he surprised, or what made you change your mind?
Well, I've known the head of UNCF for a decade, and he's taught me a lot about race in America, and we've been a donor for a number of years. But it was really the current time that got us to make such a substantial and frankly public donation to, again, bring attention to the role of the HBCUs, the historically Black colleges and universities, like Morehouse and Spelman, and to support their work, because they do develop thousands and thousands of Black leaders throughout this country. And they're a really positive part of our education system. And because white capital tends to flow to white organizations, there's relative capital isolation in the same way that we have social isolation. And so, we wanted to be part of building those bridges.
Now, the industry that I've been in, the financial service industry, is not replete with as much success as it would like in terms of minority hiring. And the technology industry is probably somewhat that way as well. Is there something that you can do at Netflix to enhance your minority hiring among the executives and your other employees?
Well, we publish the data, and we've made every quarter, and we've made great progress, and we've doubled our number of African-American employees over the last 3 years. And, that's throughout the business, but in particular in the media side. Our tech side is still underrepresented, as is in the field. So we have a long way to go, but we're, trying to make those efforts not only, again, for African Americans, but for many underrepresented groups, both in America and frankly around the world.
Well, that was Netflix co-founder and co-chief executive Reed Hastings speaking with David Rubenstein. And you'll hear more from the man behind Netflix tonight, 9 p.m. in New York. That's 7 p.m. on Thursday in Hong Kong and London on the latest episode of The Rubenstein Show. Coming up, more Bloomberg surveillance, but this time simulcast. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
The longer term is not looking good right now in terms of the support for consumption.
This economy is dynamic, but not dynamic enough given the shock that it has received.
This is a different correction than certainly we've seen in the past.
Any sort of sharp move higher in yields is when I think I see the Fed coming in, putting a lid on how high yields can go.
So I think we're all focused on that September Fed meeting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. With equity futures bouncing back up 23 on the S&P 500. Tom, a little bit of calm after the NASDAQ storm.
A little bit of calm, John. It's not risk on. You don't have higher bond yields helping out, really signifying the enthusiasm. But I like the idea of calm and maybe, John, I would say stability as well. Remember, NASDAQ 100 down 11%. Yes, that's a correction. The Dow down only 5 or 6%. That's not a correction.
A correction amidst a massive rally, and you threw the Dow in there just to throw me off. I know you did, Tom.
I did.
In the bond market, 70
you.
basis points is your yield on a 10-year. I love you too.
I'll get you something from Tiffany's.
Maybe in a commercial break. Okay, I look forward to that. Lisa, some data coming later.
Yeah, we're going to be getting at 10 a.m. I'm very curious to see what the jobs picture is going to be, because to Tom's point, this is not a full-blown recovery where people are looking at a risk-on feel in the markets. We're going to get the July JOLTS job openings data, which really is a leading indicator for employment growth. At 1 p.m., the U.S. is selling $35 billion of 10-year notes after what Jefferies has called buyer fatigue, which we have seen in some T-bill issuance recently. Also today, Congress is going to be taking a look at the U.S.-China Economic and Security Review Commission. They're holding a public hearing. Very interesting to hear what the bipartisan proposals will be or could be about legislation to potentially penalize China for transgressions that but really are, again, I want to emphasize the bipartisan aspect of this, John. You've got President Trump coming out against TikTok and WeChat, and former Vice President Joe Biden coming out today with a proposal to levy taxes on U.S. companies that outsource jobs to China.
And a love letter from the Walt Disney Company, Tom Keene, that you did not miss and has got hugely controversial in the last 24 hours.
Yeah, absolutely, no question about that. We just spoke to Keith Kroc of the Trump administration. He made very clear he folded the entertainment, the theater, the intangible debate into China as well. I mean, all of this is really, really important, and he put front and center. His last comment, John, was critical. He said everything he sees in Washington, this is a bipartisan issue of how the Disney family used the Chinese party in Western China for the making of Mulan.
I'm so distracted this morning. You and I have been too nice to each other a couple of minutes into this program. Shall I do a market check? Get some price action.
Let's do a market check, but Lisa nailed it with a JOLT survey there. This is a big deal today because the jobs just aren't there. Axios with a brilliant study this morning with the great Jed Kolko. John, the jobs aren't there for the unemployed.
That data coming a little bit later. Here is the price action this Wednesday morning. Equity futures drifting higher, up 20 on the S&P 500. A rebound on the NASDAQ too. Euro dollar 24 hours out from President Lagarde and an ECB decision and news conference. 117.54. We come at another 0.2%. And Tom, there it is. You mentioned it in the bond market. Yield's not doing a lot. 0.67% after a big rally just yesterday.
Yeah, the banner for Global Wall Street here is this is not a risk-on rally, as John mentioned at the beginning, folks. It's much more about a calm and stability after the carnage we saw yesterday. John?
The discipline to maintain discipline. A message from David Kelly at JP Morgan Asset Management, the chief global strategist. He joins us now. David, build on that. What do you mean by that?
Well, I think that we're in a recovery, but this recovery is about to slow down. I mean, the sound that you hear outside is screeching brakes because this V-shaped recovery is going to slow a lot in the fourth quarter and into early next year. And I think it's important not to just, to pile into momentum stocks. We've seen the stock market do wonderfully well this year, but there are parts of the stock market which have frankly done too well, given the amount of uncertainty out there and given the fact that down the road we are looking at higher taxes and higher interest rates. So I think it's very important for investors at this stage to be disciplined, realize that just because we've seen some good economic numbers, because the market has seemed to be okay here, don't take your eye off the ball. Recognize that we've still got a long way to go before this pandemic is really over.
Within it is the idea of what the return will be. All the actual assumptions, David Kelly, has been we're supposed to invest for single-digit return. Yeah. Nobody believes that that's on these high flyers. Do we go back to a single-digit world?
We have to eventually, because in the end, it's about nominal GDP growth. And what's happened for a long time, actually for decades now, is we've seen the value of financial assets in the U.S. rise much faster than overall nominal GDP. But ultimately, it's about the growth in goods and services produced by the U.S. economy. And so there is going to be some correction along the way here. And we are going to see a return to single-digit returns. And so it's very important for people, look at valuations carefully, because the things that are most overvalued are the things that are going to get hurt the worst when there is a more significant correction.
Well, David, when you talk about how we could see a correction in what? In tech stocks? Because right now we're seeing an ongoing performance, at least for today, a return to the underperformance in small caps, in financials, and tech is what's recovering.
Well, yeah, and because this market is very momentum driven. I mean, I think this year has been so difficult for fundamental analytics. I mean, how do you figure out what these companies are really worth and the sort of world we're looking at post-pandemic? So I think investors are just jumping into the momentum trade here. But when we get through this, when we have a more normal economy, as that begins to shape out, and we have a sense of it in 2021 and 2022, I do think that value stocks should do better than growth. Growth is very expensive relative to value. It's the most expensive it's been since the tech bubble. I also think that international ought to do better than the U.S. A very similar story. Both EM and developed country international are cheap relative to the U.S. So I think you need to think about the boring middle of the market here and try not to be too enticed or enamored of high-tech, large cap, mega cap growth stocks.
Oh, David, fold your economics in here. Kasman and Feroli, your economists, make very clear they have a very cautious view out. Is that cautious view folded into fourth quarter, or is that a cautious view for next year?
It should be in the fourth quarter if we're looking at quarterly GDP. We saw GDP fall by 32% in the second quarter. We think it could rise by as much as 30% in the third annualized, but then only rise by about 3% annualized in the fourth. So there's a very sharp deceleration in growth. And you're going to see that in jobs. I mean, if you look sequentially, okay, we added 1.4 million jobs last month. That's good. But we think that job growth will now decelerate to about less than 1 million per month, which sounds okay, except we're still 11 million jobs short of where we were in February. So again, a deceleration there. So I think in the monthly numbers, it's upon us. In the quarterly numbers, we're going to have to wait for the fourth quarter to see that deceleration.
What's the run rate on nominal GDP that you then fold into your forecasting of the equity markets?
Well, it's hard to talk about a run rate in either 2020 or 2021.
Agreed.
When you get, but once you get into 2022, we're looking at something in the order of 4 to 5% once we get back to close to full employment. But you're going to be, we'll have to bring that unemployment rate down for a while here. But we've got another problem, which is that we've got a demographic crash going on right now, which is also going to take something out of GDP growth when this pandemic is over.
David, what do you make of what's happening in Washington at the moment?
It's all politics. I mean, I think that I was hoping we'd see some sort of new support package, a phase 4 deal before the conventions, because honestly, there are a lot of unemployed people in this country who need that. A lot of people are going to suffer through this winter, but nobody wants to make a deal at this stage, it seems to me, before the election. So hopefully after the election, however it goes in that lame duck session of Congress, we'll have something to support people who just can't get back to work until the pandemic is tamed, and hopefully we'll tame the pandemic in 2021. But for right now, it's just partisan posturing because everybody's focused on the election.
David, is no deal or a very skinny deal priced into the market currently?
I think it probably is. And remember, we're talking about 8 weeks. I mean, we're talking about or perhaps 10 weeks. But once the election is over, I think there is a majority probably in Congress for some sort of skinny deal. Because after all, on things like state and local government, you can come back in January with a new Congress. And if depending on how that shapes out, you could do something then. So you just need to do something about the unemployment support. You need to do something to try and help these small businesses.
Yeah.
But it's you don't need to spend a fortune right now because you can always come back next January and do something bigger.
David, just a comment on the language that we're using at the moment. A skinny deal is now something between $500 and $700 billion down in Washington. What are your thoughts on that?
There are no fiscal hawks left. There are no monetary hawks left either. I mean, the hawks have all left Washington, which is a little worrying. We do need to do this right now, but I am very concerned that as the economy recovers, particularly if we get a good vaccine and it begins to, move forward fast later next year, we've got a lot of government debt, and this is going to be a time when we need to be really disciplined in terms of policy, just to maintain the credibility of treasury bonds and credibility of the currency. So we're going to need to have some discipline down the road. But I have no problem with spending money right now because there are a lot of people who are really in some distress, and you're not going to create inflation in the middle of an economy with almost 10% unemployment.
David, great to catch up. As always, stay well. Send our regards to the team. David Kelly there of JP Morgan Asset Management. Tom Keene, a deal between $500 and $700 billion, a bill, maybe the better word, emaciated. The words from the Democrats, an emaciated bill is now something between $500 and $700 billion. Tom, this pandemic has completely changed the way we look at fiscal policy down in D.C.
There's Mr. Biden on this. You wonder when the vice president is going to weigh in and either agree with Speaker Pelosi on a hardline stance against the Republicans, or maybe he gives way to some surprise compromise before we get to the election. It's all up in the air, of course.
Well, where's the president on it, Tom? Do you think he's comfortable with how this is playing out? We caught up with the administration in the last week.
He needs a
seemed
bill
comfortable.
desperately. I think he needs a bill desperately. It would really.
Tom, I don't sense the desperation. I don't sense the urgency. I don't sense either.
I don't know. Again, the distance is here. What are we talking, John? 500 billion versus 2.2, right? That's a big
something
gap.
like that.
Yeah.
The Democrats